Hey investors, this is my usual monthly update for my fund. This is a fund you can invest in by signing up to join the etoro platform and copying my portfolio. This fund will largely mimic my own Project 1 million portfolio. And in my Project 1 million portfolio, I have about $260,000 invested currently. So I'm definitely putting my money where my mouth is. I'm investing in the best ideas that I can find for my own money and also for my investors' money. So in this video, I'll talk about some of our holdings and also some of the whole stocks that we are keeping an eye on. First, let's take a look at what's most important, the results. So currently, we are doing about 24.41% for the year to date. I'm pretty happy with this result, although we had a slow January. But I think over the long term, given that we have high quality companies, this portfolio will continue to beat the S&P 500 and the Nasdaq. Currently, the S&P 500 is doing about 4.65%. And the Nasdaq is doing about 23.07%. So we're beating both of our benchmark indices. We're not significantly outperforming the Nasdaq yet, but I think over time we will. So now let's take a look at the holdings and let's discuss their potential. So Amazon has been a star during the pandemic, and I think the tailwinds for Amazon's business will continue even after the pandemic. The trend towards e-commerce and cloud computing is undeniable, and the digital advertising business is also on fire. While the growth rate might slow a little, the growth story is still very much intact. This is why it holds such a big position in the portfolio. Intuitive Surgical was hurt quite badly by the pandemic, and it's just gone through the worst of the pandemic. It reported its results and there was a significant decline in revenue during the previous pandemic-ridden quarter. But Intuitive Surgical provides robotic technology to elective surgeries. Although they're called elective surgeries, they have to be done sooner or later, and there's a limit to how far out they can be pushed. I expect many of these surgeries to be performed in the current quarter or at the most in the next quarter. So I expect Intuitive Surgical's business to come roaring back. These are procedures that cannot be performed through telehealth services or telemedicine services. So they have to be performed through using Intuitive Surgical's robotic technology. Alibaba is also a very strong e-commerce and cloud computing stock, and it has most of the China market to itself. So I expect it to still be a very dominant player and to continue to have high growth rates for some time to come. Google had its first revenue decline in the quarter it just reported, but this was the worst of the pandemic. So I expect digital advertising on Google's platforms to come back. Google has such a strong moat in the form of Google becoming a household name and totally dominating search, and also with YouTube becoming the second largest search engine in the world, and also with the cloud computing business that it is continuing to nurture. So I still see many tailwinds towards a higher share price. It's quite a stable business, and I don't expect it to suffer materially due to the pandemic. At least in the short term, there may be some pain, but in the long term, I think it will come back. And the other thing about Google is that there are many other opportunities it has, such as Webull and the other side businesses it's pursuing. Facebook has been quite resilient during this pandemic, and advertising is still strong on Facebook. And Facebook is a very innovative company, always coming up with new services and products. So I expect Facebook to continue to do well. It also has a very strong moat. It locks people into its ecosystem, and I don't see many serious competitors to take away Facebook's target audience. I think MasterCard is another stock that is primed for comeback as the pandemic subsides. The trend towards digital cash, digital payments is another unavoidable trend. So as more people start going back to shops or going out to travel, um, those digital payments will continue to rise, and that will power MasterCard's business. Adobe also is another very resilient stock with powerful tailwinds in digital media, digital documents, and also in the digital experience business that it has. It's becoming a digital powerhouse. It has a very strong moat in the form of the fact that it has a monopoly on muscle memory in terms of its users who use Photoshop and other bunch of products and services that it has. It also dominates documents with PDF and the services it provides in relation to that. PayPal has been on fire. PayPal's revenue growth rate doubled from the previous quarter. In last quarter, it showed that it is a very promising stock because of all those trends that are pointing towards digital payments and e-commerce. Many more merchants are using PayPal to accept digital payments. And PayPal is also coming up with other tools that it can provide to its merchants and users. Visa has been slow this year, as has MasterCard, but I expect Visa to come back as travel and more discretionary spending comes back. Baozun is another play on e-commerce in China and has done very well for us, and I expect it to continue to do well. The other plus point about Baozun is that it's very cheap compared to some of the other e-commerce software providers like Shopify or even BigCommerce that recently IPO'd. Autodesk is also a leader in computer-aided design, and I think there's a lot of potential here in terms of augmented reality and so on. Even Tesla cars and Tesla factories are designed using Autodesk software. So Autodesk is a way to play a lot of different companies as well, you could say. Microsoft is the second biggest cloud player. Actually, if you count in its software cloud products, then it's actually the biggest cloud player. So I wouldn't rule out Microsoft, even though it's such a big and established company. And that's why Microsoft also has a role to play in this portfolio. Beyond Meat is a very promising stock, especially with the trend towards more plant-based products. It showed that it was quite resilient again in the last quarter, with most of its restaurants partners closing down, but it managed to make a very successful pivot towards the retail side and was able to increase their retail sales by a significant margin. Booking and Boeing are still plays on travel coming back. Now, that is a bit uncertain and may not be in the next quarter or even in the next 2 quarters. But I think travel will definitely come back. It's just in our nature to want to travel and to explore the world. And these two companies are strong companies, especially Booking, because it has a huge inventory of hotels and even the private accommodations on its platform, similar to Airbnb. So as travel comes back, I expect Booking and Boeing to make some recovery. Finally, I also wanted to run through some of the stocks that we have on our watch list. Apple is one stock that we have on our watch list. Another stock that we have on our watch list is Trilio, DocuSign, Shopify, Square, S&P Global, Nvidia, and Paradox. So we are keen to own these stocks, but we're waiting for a better opportunity. And as and when we do find the opportunity, I will probably buy them for the portfolio. Let me know what your thoughts are on this portfolio and on the stocks that we are keeping an eye out on. How do you think the second, the third and fourth quarter of the year will play out? We look forward to your continued support.